All right, deep divers, welcome back. Today we're heading over to India. Going to be breaking down Hindustan Unilever Limited's second quarter results for 2024.
You know them, you love them, it's HUL.
Exactly. They're like the backbone of Indian consumer goods. Think about it.
We're talking everyday products here.
hmm
Millions of people using their stuff every day. It's a gold mine of consumer insights.
Like a snapshot of what's going on in kitchens and bathrooms across an entire nation, right?
Totally. And we've got their investor presentations, press releases, the works, ready to dig in.
Absolutely. Now, we got to set the scene a little, right? India's economy, it's kind of a mixed bag right now. Urban growth is slowing down, but rural areas are bouncing back. And of course, we've got those commodity prices going wild.
Yeah, it's a bumpy ride out there. The reports highlight tea and palm oil, specifically really impacting the whole FMCG sector. Be interesting to see how that all shakes out in the details.
Okay, so with that backdrop, how did HUL actually do this quarter? Did they manage to weather the storm?
Well, at first glance, their underlying sales growth looks kind of modest, just 2%, with underlying volume growth of 3%.
So, holding steady, but not exactly setting the world on fire.
Not so fast. There's a catch. Remember that one-time tax benefit they had last year? Adjust for that, and both sales and volume growth jumped to a healthy 3%.
Ah, gotta love those accounting footnotes. But hey, 3% growth in this climate, not too shabby at all.
Exactly. And importantly, their EBITDA margin is holding strong at 23.8%. Shows they're managing profitability well.
Music to any investor's ears. And speaking of music to my ears, let's talk about the segment that really crushed it, home care. They're boasting a solid 8% growth. What's the magic formula?
Volume, volume, volume. It's all about that volume growth. Fabric wash, household care, both seeing high single-digit growth there.
So even with economic worries, people still got to keep their homes clean and tidy?
Yep. And here's something interesting. Liquid detergents, especially for clothes, are really taking off, outperforming everything else in the segment.
Ooh, now that's fascinating. Suggests that even when money's tight, people are willing to spend a little extra for that added convenience, maybe even a touch of luxury.
Right. Speaks volumes about shifting consumer priorities, even for everyday essentials. Now, let's pivot to beauty and well-being, where things get a little more...
Nuance. Gotta let a good nuanced business story. Lay it on me.
So their initial growth figure might seem a bit underwhelming, only 1%.
Ooh, sounds like those economic headwinds might be starting to bite.
Hold your horses. Remember
Yeah.
our friend, the tax benefit. Factor that in, and their growth jumps to a respectable 7%. All driven by, you guessed it, volume.
So people are still prioritizing looking and feeling good, even if they're watching their wallets a bit more closely.
Seems that way. Now, within beauty and well-being, hair care is the clear winner. Sunsilk, Dove, Truzem, those brands are going strong.
Those are some heavy hitters in India for sure. Lots of brand loyalty there.
Absolutely. But it's not just hair care. Skincare and color cosmetics are also seeing decent growth, mid-single digits.
People still want to look and feel their best, even with everything going on. Makes sense.
It's that classic balance, right? Essential spending versus those little indulgences.
Exactly. Which brings us to a segment that might seem like a different story. Personal care. They're reporting a 5% decline. Should we be worried?
Hold the panic button for now. This one's got a twist. The decline, largely due to some planned pricing moves by HUL.
So strategic pricing decisions, maybe to stay competitive or manage those crazy input costs we talked about?
Bingo. But here's where it gets interesting. Despite the overall decline, there are premium products within personal care. Those are booming. Body wash, for example, is seeing double-digit growth.
Wow, that's telling. Even when they're cutting back elsewhere, consumers are willing to treat themselves in small ways.
It's a trend we're seeing everywhere, not just India. Economic uncertainty or not, people crave those little luxuries, the little bright spot in uncertain times.
I get it. Makes perfect sense. Now let's move on from pampering ourselves to, well, everybody's favorite food. What's cooking in the foods and refreshment segment?
This one's interesting. Revenue doesn't tell the whole story here. They're down 2% in revenue. But get this, HUL actually grew its market share.
So a bigger slice of a slightly smaller pie?
You got it. Now, within foods and refreshment, it's a mixed bag. Tea is a rock star, strengthening their position with solid volume growth, especially in green and functional teas. Coffee also saw a nice double-digit jump. But packaged foods, ice cream, soma, those are seeing slower growth.
Makes sense those are the first places people cut back when money's tight, but it's interesting to see how preferences shift within those categories.
Totally. And even within food, there are pockets of innovation doing well. The report highlights food solutions, mayonnaise, international sauces, peanut butter, all seeing good performance. driven by new launches, wider distribution, tapping into those evolving tastes.
It's not just about selling more of the same old stuff, it's about adapting, being in tune with what people want. That's how you find those growth pockets, even when times are tough.
Exactly. Staying ahead of the curve, anticipating the next big thing. And speaking of the future,
Let's talk about what lies ahead for HUL. What are they saying? Feeling bullish or bracing for impact?
cautious optimism seems to be the name of the game. They expect a gradual recovery in demand, but they know there are still challenges out there.
Like what? Give me the lowdown.
Well, those commodity prices are still a huge question mark. If they stabilize, HUL's projecting low single-digit price hikes, but another price spike that could squeeze their margins, force some tough decisions.
And we can't forget about inflation, constantly shaping how people spend their money. So how's HUL planning to navigate these choppy waters ahead?
Their strategy boils down to something they call volume-led growth. Basically, they want to sell more stuff, even if it means keeping prices steady.
That's a bold move. So they're betting on winning over consumers with value affordability rather than just jacking up prices.
It's a gamble, for sure. But they're not just winging it, they're doubling down on their core brands, making sure those stay top of mind. At the same time, they're pushing hard on innovation, especially in those high-growth areas we discussed. Premium products, new food formats.
So it's two-pronged, strengthen the foundation, but also reach for those shiny new opportunities.
Precisely. And underlying all of this is a relentless focus on operational efficiency. HUL is committed to streamlining, cutting costs wherever they can through their net productivity program.
So even if revenue growth isn't through the roof, they can still deliver strong profits by running a tight ship. Do more with less, right?
Exactly. Classic business strategy, but it takes serious discipline to pull it off, especially in a volatile market like India.
It's like walking a tightrope, isn't it? One wrong step and
You said it.
Mm.
But their performance this quarter, it tells me they're finding that balance, adapting to India's ever-changing market, all while delivering solid results. It's a masterclass in navigating complexity.
it really is. Kind of blows my mind how much they're juggling. But they're doing it, finding that sweet spot between protecting their core business and, placing those bets on what's next.
Speaking of bets, their commitment to sustainability really jumped out at me in these reports. It's everywhere. Yeah, it's baked right into their DNA, isn't it?
Yeah.
Not just some PR afterthought. It's fundamental to how they operate.
Which makes a lot of sense these days. Consumers, especially younger generations, they want to see brands that share their values.
Absolutely. It's not just about the product on the shelf anymore. It's the company behind it, what they stand for, the whole package.
Okay, so we've covered the numbers, the strategies, all the external forces at play. But what's the takeaway here? If we zoom out, look at the big picture, what's your key takeaway from HUL's performance?
What really strikes me is how they're balancing growth with profitability. In a market that's changing faster than ever, investing in those high potential areas like those premium products, but never losing sight of operational efficiency. It's a tough needle to thread, especially right now.
Like they're playing 3D chess while everyone else is stuck on checkers.
Perfect analogy. They're thinking several moves ahead, anticipating those roadblocks, always adapting. It's impressive.
Which leads to the big question, right? How will these strategic bets, this premiumization push, how's it going to play out as India's consumer landscape keeps evolving at this crazy pace?
That's the million-dollar question, isn't it? Will this whole trading up trend last, or will economic uncertainty rain on their parade?
And can HUL keep their core segments strong while tapping into these new growth areas? It's the classic innovator's dilemma, how to embrace the new without losing sight of what got you here.
Exactly. And we can't forget those external forces we talked about earlier. Commodity prices going haywire, inflation, the global economic roller coaster. HUL's walking a tightrope for sure.
It's like a real-time business case study unfolding right before our eyes.
And that's what makes it so fascinating, right? No crystal ball, but by really diving into the data, understanding their moves, taking that wider view, we can start to connect the dots, get a sense of where things might go.
Which is what we try to do here on the show, yeah. Give our listeners the tools to not just understand what's happening, but why it matters and what it might mean down the road.
Exactly. Empowering listeners, helping them form their own conclusions. That's the goal.
So for all our deep diving listeners out there, what's the one key question they should be asking as they watch HUL's journey unfold? What should they be paying attention to in the coming months?
Ooh, that's a good one. I think the most crucial thing to watch is how HUL manages this balancing act between volume-driven growth and maintaining profitability. Can they keep those sales numbers climbing while navigating those potential cost increases on the horizon? That's the tightrope walk. That's what I'll be watching.
Yeah, they're playing the long game, that's for sure, and on a massive scale. But, that whole balance thing you mentioned, it's like it's at the core of everything HUL does.
It's almost beautiful, isn't it? This intricate dance between their legacy brands and pushing the envelope with innovation, balancing affordability with that growing demand for premium, kind of like we were talking about. And through it all, staying true to that sustainability mission, really something
Makes you wonder, though, how long can they keep all those balls in the air? So many companies, they try to do too much at once, and they end up, well,
face down in the dirt, right? It's the age-old question. Only time will tell how this story unfolds.
yeah.
But the more we understand their game plan, their pressure points, how this market's moving, the better we can appreciate just how complex this all is.
And maybe even make some educated guesses about what's next. So for our listeners, the ones who want to keep digging into this on their own, what should they be watching out for in the coming months? What are those telltale signs that HUL's strategy is working?
Good question. Keep a close eye on their market share, especially in those key areas like home care and beauty. If they're still gaining ground there, that tells us their volume-driven approach is resonating with people, and their innovation pipeline, that's key. What's coming out of there, particularly in those high-growth segments like premium and sustainable products, and of course those commodity prices. How HUL deals with those cost pressures, that'll be a major indicator.
So much to keep an eye on. This is like a masterclass in navigating a crazy, ever-changing market. Really appreciate you walking us through it all.
Happy to do it. Always a good time digging into this stuff.
And there you have it, Deep Divers, another journey into the world of business and finance. Until next time, keep exploring, keep asking
And
questions.
keep those minds sharp.
Absolutely. See you all in our next deep dive.